It doesn't shine a light off of this spot though. I am curious about that. That space in time. This is a B point down here too. It's from days ago though, which is kind of interesting to me. Because we knew that the day that it rallied off of this when we want this target above, that was a B point and it was unsafe to drag any stops above it at any given time. And now here we are, hitting that very level. It is also the 188-200 to the biggest B point of the day. So we have this big B point. Now, one thing that's really kind of getting to me is like this movement right here. Let's find it. I'm going to bring it over. If we could do this movement, where it goes sideways, up, then big down, and back to the middle. And I guess it went up, down, and then up here, but realistically, we went up out of the sideways. We did a really big downwards move. You know, are we interested in coming right back up to test these points? Because I mean, I tell you, how many days have we literally done this? It's I feel like we've been doing it a lot. Like this day here, it was 9 o'clock in the morning after sideways moving. Or this is Monday, so sideways overnight. We went up, down, and then that was the low that we're rivaling now. And then I can see here we went sideways on Tuesday. You know, ever since the open, here's. Oh, that's not the open, that's middle of the night. Sideways, up, then down, caused this big push. You know, I can see that it definitely went sideways in there, up, then big down, and then decided to go up like that. That's the pattern I'm looking at. And sure, it comes in different shapes and so on, but like the main thing is are we doing what we did there before? Like even from this movement here, like coming back like that, like I can trace over what we've done here very similarly to what happened up here. The only thing that's missing is the retracement upwards. But, you know, we came down and then had this pop-up that was like, you know, a little bit higher, maybe not even that much higher. But then we clearly came back through these lows. We clearly came back through it. That caused a big push up throughout the rest of the day. Now, like on the day or on the longer term time frame, we can see like this is the 15-minute. You know, we're pulling back overall roughly to the 61% retracement of the entire push up. Like that is where we are right now. We're on that thick yellow line. Like that is the 61. So it's not only the 188-200, it's also the 61. And you know, it's that weird pattern that's going sideways, up, then down. And you know, right now we're lifting off of it pretty decently. So what's the value of getting back to the freaking target? It's huge. It's like, what risk do you have to take in order to be part of a potential 180 point trade? And now that it's up 50 points, can you make sure it never becomes a loss again? You know? It's like they're thinking about the same thing. Now the gray bar definitely is something that's like a good point to make sure that it's safe, because of the fact that we've went sideways around it. It's kind of like we've done a spike on the top and a spike on the bottom. We've shown our respects from both sides. Like it's taken roughly the same amount of distance and space as what it took to get from one side to the other. Like you can see the triangles begin, and like they took the same amount of time. And then if I look at the distance that they make, you can see from the beginning to the end, it's exactly the same distance. See how the gray bar is like the medium between both of them? Like, it's not like we both started on the same level exactly and came back to it. Like, the gray bar was like this. And we made the same spike on the top of it that we did on the bottom of the gray bar. And it's the gray bar that sets the boundary between the two equal patterns. Like, why does the market make this a fact? You know, that's the weird part about it. Could it be done then? Well, that's the funny thing about it too, because when we do this, like it's technically a way to make a wave with gap. Like we've done this, which is very similar, of course, to what we always do, which is, you know, connecting in the middle. This one does not, though. Well, it has not yet. And what's funny about it is if it ever does, it will be because it did more on the upside. Because getting back to this middle area doesn't mean touching this low. And sure, that low is a B point. Like it has a B point on it. I know it was hit on the short term. You know, we can see that it actually made a perfect S wave in here before coming down. So it's in the business of doing this. If there's one thing that we should allow it to do, it is that. You know, today I think that we're going to do a big version of that. It's going to be huge, big version to the upside. End up just right back at the middle and one big S wave. I expect all hedges to get knocked out in the grand scheme of things. But the most attractive level has got to be the middle of this range. And I'm like, well, hold on a second. I'm like, did I just say that? The middle of the range? And I'm like, well, making this perfect would be a perfect S wave, equal distances out of both sides of this range. Like if I take this down, like why is that our low? Like why is the triangle that we made on the top good enough if produced on the bottom to get us exactly back to the middle? Coincidence? You know? Strange to me. Well, of course the 100 is here, and what that tells us is that this entire area in here has doubled down to get us there. And I mean, we didn't get to the 200 all the way, we went to the 188, which is a fib level. The 200 isn't a fib level. Well, it might be. I'm just thinking, you know, the one thing that comes first is it's double. It's double 100. And that's more important than it being in the Fibonacci sequence. Now the 161 and the 188, those are weird numbers to people that don't understand Fibonacci's. Those are definitely Fibonacci numbers. Like why would we ever be interested in the 141 and 127 and the 188? Like the 50, the 100, and the 200 are not Fibonacci numbers. They're just even portions away. Like 50's half, 100's whole, 200's double. Well, like I said, I think it's going to end up being one of these big S waves right back in the middle.
Oh, right. No.
It doesn't have to stop when we get there either. We'll see how it gets there. Sometimes, like, if it gets there, okay, like, right now, I can see that there's some counter trend moves that we've made on the way down. We've made this counter trend move here. Like it was like we did that counter trend move here. We've done it there, we've done it here, we've done it there. Many times in this little area. Like it's like how much we pull back when we pull back. Like if anyone ever drags their stop within this close of the price, how on earth do you expect to keep the position? When it clear, how many times did it make it on the way down? I'm like, yeah, exactly. I can't even tell you at a quick glance. I could count them. I'm not incapable of counting them, but I know there's so many that it's not good to assume you're safe within that distance. And that's like 50 points. That's the crazy part about it. It is 50 points. The average pullback's been 50 points. So it raises questions to me like, hey, when we come 50 points above a level that's appropriate to return back to from above, what are the odds we're going to make a counter trend move there? And I was like, originally what my thought process was, is if we run into the green zone and make that pullback, it would look like a head and shoulders to a lot of people, you know? So that's one move that an inverse head and shoulders, of course, but that's one move that I am very much considering. I know it's in their mind as something that they've done and something that worked well for them. This is the green zone. Beautiful 5-wave move all the way up, and you know what's funny is we did the freaking counter trend moves in spots where we didn't make them before, like in this little area in here. We tried to make it in the middle of both of those. I can see they're trying. I know they're not very obstructed today. You know, that flat zone right there, 11 o'clock, people quit. And they all think that the day's bearish too. Like I was explaining, we condition them. They think, you know, it's hard to catch the long trade. Most of the day it's been really tough on them, blah, blah, blah. I'm like, no. Their experiences don't matter. Because they think that they're going to continue happening. And I'm like, well, if their experiences were going to continue happening, they'd be able to change their actions so that they were in line with experiences that could continue happening for them. But the market keeps changing. And I embrace its changes every day. I look for them. Because I can see that it's a matter of fact that it changes. And sometimes we have patterns work, and sometimes they don't. Sometimes we're in an environment where all patterns are targeted for failure. Sometimes they're all amazingly perfect and work out like phenomenally. Some days we are like this. We start the day at a sideways point. We make a big movement that gets everyone excited and ends up exactly right back at where it all started. And that's exactly what's happening today. Of course, the big S wave. And I don't forget the forgotten circle, you know. The forgotten circle, you want to know what's interesting to me about that is this. It marked a time, did it not? And what happened at that time? It reversed. Didn't get to that circle, but maybe at that time we reversed to get to that circle. Yeah, like it was this movement right here. And the reason why that movement was attractive to me in the first place is because it connected with this low as well. And it was also that high. So both of those circles, both of those distances amounted to that time. Like they were both saying, yeah, sure, we have an angle. Yeah, sure, we have a distance, but everything amounted for it being at that time. And then one thing that's strange to me as well is if I connect this dot right up here and then connect this dot right down here, I wonder, you know, that was pretty much reversal time. Like that distance that we made. We took this entire kind of square and moved it down one full portion before returning back up, which is intriguing to me. That distance is still very far away, but like I said, 400 points. Oh yeah, it's roughly 400 points. So. Oh yeah, totally. It did that. Deja vu. I'm almost at the red zone again, and the 61 is all the way up here too. So like, what are the odds we don't see that thing? I'm thinking we totally see that thing. I can see what we've done here is created a blue line. I find it very likely that that blue line's going to catch up to us and we'll end up touching it. And then like, what about this thing? Did we do that thing? Oh yeah, we did. This is another idea I mentioned here where we went sideways, we went up, we went down, and then we returned right back here. That is the same. Now we're at the 61 too, like basically at the 61, almost at the 61. I mean, it could be like a fourth wave here, That's another thing. 1, 2, 3, oh, and then 4, and then we actually go up really significantly again. Perfection. Because it did do a rather large pullback, more so than what it did here, but it made it to the blue line, which was, in need of testing. We knew at some point it was going to get tested. So now it is tested. But the circle remains untested. And like the distance that we made down here, we did twice down before reversing. Like that makes me wonder about doing this twice up. What would that put us at? That would put us at the circle again. Basically, I'm not going to fight it about that, it's basically that level. So I can see more things are pointing towards us trying to get to that point. It's the forgotten circle. That's what I can make the video on. Because it is forgotten. At the end of the day, the market did decide to make something that was like an S wave that carried on. And what that reminds me of is this movement that we had on the other side of the spectrum but when it went sideways up then big down, and we actually rocketed through the top. And we kind of even did it here as well, sideways up then down, and then we rushed up like that, and like this whole area was the sideways to this up then down, and then we rushed up. It's like a bigger version of the small thing we've already been familiar with. I see that too. It loves that thing. As soon as people start to pile in because they understand it, it's for the people that see it original. That's the way I look at it. The people that originally see the value in it. As soon as most people start to latch onto it, it'll fail. And now it's happened so many times where I'm skeptical of the next one. The next one isn't for the people that saw it first, the people that saw the need for it. The next one is for the people that didn't understand it and want to be in on something that's the best part of the day. So I'm not interested in the next one. I'll be very surprised if they continue spamming it out there, because people will catch on. All they have to do is be there the whole day to see that this is a plan for the whole day. We literally went to the circle. This is where the big weight has been lifted. Like every single one of the aspects to the plan was played out. Everything from testing the blue line from above, everything from stopping out the people at the 188-200. They're being used as liquidity for profit taking for major institutions that had this plan. Yeah, it's like they're listening. It's crazy. 800 for every 100 that you put into the futures market at the bottom. 800%. And it's like, what is it to risk $100 on a potential movement that can give over 400 points, over $800? You don't risk the 100 in one try. But let's say you give yourself, on an $800 profit target, how much are you willing to risk in order to get there? There's not very much risk. The more videos that I make on all the amazing things that are happening, less people will watch them. I'm like, I don't care if it even goes down to like 1 view because people stop watching it. Like, for the next person that actually finds value in it, they will have so much to learn, so much to watch, so much to see, so much to understand. That's the beauty of it. And I look forward to what people will have to say once they understand what I've been making. This entire archive of experiences is on the best way to trade the market in 2024. With the profit from this trade, it's like I don't want to be super aggressive with things that aren't as attractive as trades like that. Like, those are really, really good trades, really, really clear cut, worth waiting for. If tomorrow's sideways, not worth trading. Wait for this again. This is what you want to trade. What are the odds that this is the green zone and this is the red zone to a range we don't even know we're using yet? Reducing the size of the long trade is definitely key. And if you are going to hold anything, it would mean that regardless of what happened to that trade, if it was to come all the way back down to the low, you will have been paid the majority of your hard work today, but you will also have some exposure for tomorrow. Because at the end of the day, even if you have 25% of your position left, like I was saying, if you had 3 contracts down here and you took 2 of them off and you let that one run, it could be worth $800. You want to know what's funny? That last contract is worth $1,200, $1,300 now. Last contract. Yeah. $1,300 is what it's worth for every 100 you put in. It was 800 when we got to here. I was between saying to hold 25%, but also if you keep the whole thing and hedge it with half. So if you have 100 going from the bottom and that's benefiting you up, if you took 50 short, you know that if it blew up through the 50, you would only just be making half for the time that you were wrong on this. Now let's say it did pull back. Now you'd be able to profit on 50 and not have to buy anything because you still have 100. And if it rallied from here, who has to buy more here? You've still got 100 from the bottom. Why on earth would you buy here? You've already profited off of the 50 making you money. But in the event that you were wrong on the 50, you would still have 100 going up, so it would only cancel out half. So how do you lose? Because I'm trying to think about how you could lose. Let's say it did go up. Sure, this short position would lose money, but not as much as you're making on the bottom. You know, the bottom one it'd be worth twice as much, so you're only losing half. And I mean, what is it to have all of this profit and still have 100 at the bottom? And let's say for a second, if you were losing 50 and you lost up 50 of this part, you're making half through here. And then as soon as you close that trade, you're back to making full 100, and all of the risk that there ever was here is gone. And you can just continue holding 100, the full size position, where you didn't have to trim any off. Most individuals, they'd be like, oh, I have 100, I better sell some. The hedge funds be like, oh, we're going to hedge it with half. Because if we're wrong on that half, we're only making half for a second. If we're right, we get more money. And we don't have to decide where it comes up from because we're still long from the best price. So that's the best way to do it.